There's the sound. Cool. Well, hey everyone, welcome back for episode 3 of Ape Tapes. Today we'll be joined by another, awesome panel of founders and builders in the DeFi space. And so we're going to cover a variety of topics. I think part of the goal here is to share insights from those that are building at the bleeding edge of DeFi. We're going to skip introductions just because I think everyone knows everyone that's on this call. And so I think, Kain, maybe we should just kick off with what we were discussing before we got started, which is this inflection point for you with Synthetix recently, where you have always been the focal point of Synthetix governance calls, but you were just mentioning that, you sat on a call and realized, hey, like I'm no longer the center of this. I'm no longer having to be the global project manager for Synthetix. So anyways, curious if you can kind of frame that up, and then we could talk more about what that looks like for other DeFi teams and what lessons we can learn from you.
Yeah, thanks for sure. Appreciate it. So I think even more, it was actually more than that, right? Because I haven't been doing the governance calls for a long time, right? Like Garth has been coordinating them. I maybe speak on those governance calls like with, I don't know, for like 5 minutes out of an hour or whatever, right? It was actually not even so much me not being the center of the governance call. It was the core contributors, right? So the 25 people or whatever who are paid directly by the Synthetix DAO to work full time on the protocol were not in charge of this governance call. Like it was the Spartan Council had taken control over it. And like I'm a fairly unemotional guy. Like I'm pretty focused on things, but like I was crying. Like it was actually like emotional for me. That first like 10 minutes, I was like, holy shit, like this is real, right? Like this thing that for the last 4 years I've been talking about and saying like, we need to do this. It's so important. We need to get there. Like, and we're not there, right? Like this is not like a binary thing of like, okay, we're decentralized or not decentralized. Like, but I remember in Reddit getting just like flamed to like oblivion, right? About like, this is all centralized and it's bullshit. And like, like in like the maker forums, and like everyone just saying like, this is like such a scam. And like, you can't take something that's centralized and decentralize it. And yet I think we've kind of proved the market wrong, right? And to what Tyler was saying before, I think one of the most ironic things about all of this, sorry, one sec.
Kain, you weren't on the last call, or the last episode, but my kids literally came in from like a bath. So they came in at the very end and were like, I mean, naked, obviously, but in the background, no one could see it. And I just, oh my God.
Yeah, no, they love, I don't have a lock on my door, which like is a good thing to allow them to like get in if there's like a problem. I don't want to like lock them out, but like, yeah.
Permissionless entry.
Exactly.
Travis, Kain may be the real
infinite online. Decentralized Kain is.
Travis, true. Kain may be the real DeFi dad. You might have been his identity.
Yeah. Dude, the only place I have privacy is the bathroom, and like I lock that. Like, this is the only place where I can go to the bathroom and the kids will leave me alone. But sorry, Kain. So you were saying you were getting a little emotional as you were sort of realizing you guys were realizing this like move to decentralizing.
Yeah, it had happened, and what I was kind of saying is like Tyler's question about like people who are working on the protocol, like, and actually that's not even fair. Like even people working on the protocol. So now we have these multiple different groups of people. We've got core contributors who are paid by the Synthetix DAO. We've got people who are running, the Grand DAO, the Spartan Council. And one of the big transitions here, I think, and some of this came from watching Yearn and some of the other DAOs, kind of fund people directly out of treasuries with tokens, rather than the previous model where like we had, employees and we converted them into core contributors by paying them monthly grants, right? But, we, even within all those groups of people over the last like month, and specifically since that kind of event of the governance call, have kind of been like, where are you? Like, what's going on? Like, what are you working on, right? And what I was going to say is, I think the grand irony of it is, like, before Synthetix was anything that anyone cared about, I spent all of my time doing R&D. That's all I did. Like, I just thought about problems and like thought about the things that like we needed to do. What were the issues? Everything. I didn't need to be like this public face because there was no one cared, right? And it then shifted, and like so much of my time became like coordination and like, you know, PR and you know, just like talking about the project and trying to explain it. And in the last like 2 weeks, it's been amazing because I've kind of stepped back and gone back into like R&D mode, really thinking about like V3, like what are some of the risks of like L2, you know, how do we keep pushing this governance transition, right? Like, how do we actually take it to like fruition? And people are like, is everything okay? And I'm like, yeah, it's fucking amazing. Like, get away from stop bothering me. Like, this is great. This is exactly what we need. But I think there's a tension there, right? So, you know, it's interesting. Like all crypto, it's always interesting.
Yeah, I'm curious, Kain, because I was part of like the Synthetix community like from a year and a half ago, and I can say from like my experience, like I was just like a developer building, you know, project on DeFi, which was DeFi Snap, which became Zapper, and you know, I was talking to a lot of people on Discord across a bunch of different protocols, but to me, I noticed like a huge difference when I entered in the Synthetix Discord and how like everyone was just so involved and answering questions. Like I remember you being very active there too with developers and people kind of outside. And so I guess like my question would be like, how kind of like Synthetix was able to have like this strong core in the community. Like it seems like there were like seeds that were planted that really like ensured that the community could, you know, have a strong culture and scale.
I think the first thing was that we appointed these guardians, right? And you know, without upsetting anyone, like the first cohort of guardians included people like, you know, Arthur 0x, right, and Degen Spartan. Like, these were the core people in like, because in a very, and you know, Stani knows this as well, right? Like with Eatland, like no one cared what we were doing in 2018. By the time we got to the end of 2018, like you could do literally anything, right? And so I think the few people, and when I say few, like it's like a few dozen, right? Like there were maybe like 50 people who were engaged and cared. We saw that, and we saw that, you know, even amongst that, there was still noise in crypto, right? And what we would do is we would say, okay, we're going to appoint these people who are in here all the time, who are answering questions. We're going to make them guardians, right? They were like community moderators, but it took on this role that was like kind of deeper. Like they felt, you know, a deeper sense of kind of ownership of the protocol. And they were obviously large holders, right? You know, in most cases. But more than that, I think they genuinely believed that the market was wrong. And like, if you go back and see the tweets that like, you know, Arthur would like tweet about and the research that he wrote, like he was very convinced that he was right and the market was wrong, and the market did not understand what was going on here. And, you know, obviously he was right, and he's done very well out of that. But I think that you need to find, you need to find that like core group of people that like get what you're doing and, you know, really foster that, right? And the way that I did it was by engaging with them and being there. Like I was one of those people that would be there answering questions, talking to them about the problems, like engaging in it. And you know, there's always hard problems, right? Like a lot of the teams that I'm talking to, particularly teams that are more front end driven, if you will, right? Like wallets, you know, obviously Zapper, you know, falls into this category. They're trying to work out like, they're harder to decentralize, I think, than Aave. Like Aave is an easier thing to decentralize. Barnbridge is an easier thing to decentralize than something like Zapper, right? Because it is so front end driven. That's a fucking hard problem, and there are people that care about it. And if you can find out who those people are in your community and like deeply engage with them, you will form that core that will, you know, kind of take things forward and you know, drive it, and they'll keep you honest as well. Like they'll call bullshit when, you know, you're like not, you know, not adhering to what you said you would. And I think that's kind of the key, is you need to find that like core group of people.
I actually want to ask a question though. I have two questions for Kain and Stani. And I'll say that I feel like I'm one of the people in the industry that is probably researching decentralized interfaces more than anyone. So the Zapper squad, I definitely want to hit y'all up. But Kain, I'll just ask both questions and let y'all answer them. But Kain, do you feel like that it benefited you to have that, like not at the time, obviously it didn't feel like this, but where you say that like the council, you can pay them a certain amount of money because they're already so financially aligned. Like a new company that comes into the space, like they may not like okay, like even Zapper, right? Like they go release a token, but they may not have that community that stuck with the guts through them, where like when you really hit a down market, you kind of know like who cares about your protocol. And I don't envy y'all for having to go through the hell of dealing with the bad side of the community on that. But I do think that now that it's like the hero story, like y'all went through the downside, now you're on the upside. So you kind of know, not even just at the protocol level or the Kain level, but you know at like the members of the community level who really stuck with you. And like, how does a new protocol deal with that? Like, how do you build these like diehard characters? And that's my question to Kain. And then I just don't mean to hijack this to run it, but Stani, one thing that I think is like super interesting about your situation lately that I've been watching, and I guess baffled by and selfishly asking this question, is like what I just did with like NFPs. Like maybe I had like 2,000 messages a day, but like you have like Mark Cuban tweeting about like Aave. Like how are you dealing with like the lead flow of like institutional interest, people hitting you up, wanting to like, there's no way that you're not more busy than me. And I feel overwhelmed, and like, I'm not getting Mark Cuban tweeting about me. So like, how are you dissecting that information and like how are you dealing with that, I guess? And those are the two questions I have.
Stani, can you just answer that for me as well? Because I would love to know how are you even here right now?
Dude, I was hoping you would answer. I mean, you're busy.
There's no way that Kane's getting more though than like a Mark Cuban tweet. I mean, that. I used to run a candle company that got like put on the front page of Reddit, and we got like 100,000 hits a day I'm sorry, 100,000 hits in 10 minutes. Like there's no way that Kane's had to deal with a Mark Cuban tweet, or that even the institutional interest is following that. So Stani, you're the only person in the industry that can answer this question.
No, I think I'm crazy enough just to kind of try to get the input in. Like I think the important part for a founder is to do, like, probably the most important as you kind of like scale is to be able to say no, right? So if there's like a lot of inquiries, you have to be a bit stiff and then channel some of the inquiries to other places. You know, some of like, you don't need everything that's coming in, even if it's something very big. There is other founders in the space that could actually help you and in the same way. For example, if it's an institution is looking for just using DeFi in their product offerings, I mean, if you don't have bandwidth, it's totally fine to just shift that and channel it to other places. And that's how the space gets more kind of like a traction and input. But I guess like one of the things is that I'm trying to also like do is to manage my time a bit better. So I used to work like crazy. I still work like crazy, and I probably will, but just to kind of like do more strategic things. And also like this boils down to stuff that I have done less is what Kain was saying about being involved with the community. And I've been doing that for very, very long time, especially like in those very dark days of bear market. And I think it's now that we have some good people there, and it's just like you need to trust more people. And if you run out of bandwidth, it might be that you might also need more people. That's what we are doing at the moment. But there's also like a fine line on like, should you handle those things, or should you let the community to actually jump on that? And I think the biggest issue is usually that to kickstart a kind of vibrant community that is incentivized and also could work on different parts and could take inputs and different things that people are asking. And I think that's the hardest part. Once you have this kind of like a seed community of developers and smart people, and not just people who are actually kind of like following you, but they want to be part of what you're doing, like contributors. And then it's a bit easier. And I think that's what Kain's talking about, that now kind of like that is happening, and you don't need to be everywhere, and you need to have the oversight, because the project is taken over by the community, and that is something very beautiful. Like if you can just stop the whole with your team building, and by stopping you still will see innovation and even better innovation. That's the kind of key point here. I mean, I like to take the Linux as an example, because there's roughly like 2,500 contributors in the Linux system, in each Linux release, and like Linus Torvalds himself is contributing and doing a bunch of other things, but he's just like very small contributor in the whole system. That's I think it's just about.
But if he left, then it would collapse on itself, right? Like as
No,
soon.
actually.
I'm joking. I'm joking.
A lot of people hate Linux. Actually,
like who are you forwarding? Like, are you not like who are you forwarding all these emails to? Like, who's responding to your Telegram messages? Are you just leaving like all these institutional investors on red? Like you still have to be able to deal with like.
Do you want a pro tip?
This is a very aside. How are you dealing with the
Tyler?
flow?
This is a very good advice. Like if you run out of time, put your VCs to work for you and let them take those calls. So you can channel everything to Santiago.
So maybe just to quickly come back to your first question, Tyler, I think one thing that I will say, and this is not a solved problem, and this is just my like off the cuff response to it, right? Like I've talked to a lot of teams, and I talked to a lot of early stage teams. It's something that I do try and make time for. But I think when it comes to like these front end decentralization projects and how do you empower community members if you've got a token and the token isn't like a high cap DeFi blue chip like Aave or something like that. I think in some ways you can flip that around, right? And you can make that to your benefit, because if someone's willing to take let's take a random example, like a Zap token, hypothetically, right, which doesn't exist, but let's say it did exist. If I was willing to accept Zap tokens, right, locked up for 6 months to like do something for the protocol, I've drunk the Kool-Aid, right? Like I'm an idiot or I've drunk the Kool-Aid, or both, right? Because there's no market for it. I can't sell it. I don't even know what it is. Like I don't know a price. Like if I'm willing to just accept some ownership, some increased ownership over this future protocol in exchange for my like time and effort and blood and sweat, then amazing, right? So I actually think you can flip it around. Like if I give someone Aave for something, I might as well give them cash, right? Like it's just a little bit more frictionful cash. And in fact, it's probably better than cash because it just goes up, right? So if they wait 15 minutes, it'll be worth more money than when I gave it to them, right? So like, I think that, a lot of these tokens, they've just turned into cash. It's like giving someone BTC or ETH or whatever, right? But if you're an early stage project, and especially if you put some time horizons around these things, like that requires buy-in. So I think that is one way of leveraging it and flipping it around.
Yeah, but okay, so I really appreciate your answer to that. And my actual question is and is the inverse of that. What happens when there's a you in okay, so Synthetix and Aave started low with no hype. And then y'all
No, that's not true.
okay,
That's
so
not true at all.
high, went
I mean,
low,
I remember. No, Troy. Here's the. So like, I want to go back to something. So like, Haven, which is now Synthetix, and Aave, Ethland, right? Were quite, you know, at the time were very. I don't like the word hype. They were hype projects. They did a Haven particularly. I mean, it was massively oversubscribed. There was a lot of interest.
yeah.
So I don't like. I think that's, you know, not necessarily true. But I want to go back to some like, look.
But
what I like about these
curve is what I'm trying to say is like, what about a curve that just walked into, like when they opened, they were doing well. Like, so I understand like how a lower market cap project can get people involved for the long term. Like that's natural, right? But what about a curve that like opens high, right? Like how do they incentivize? And I'm not using Curve particularly. I don't know their token model. I don't know how much they have in reserve. But in the scenario that a project is already doing well, right? Like, how do they incentivize community when maybe there's 2,000 token holders, right?
Yeah.
Like maybe there's 200 token holders and it's worth so much. Like, how do you incentivize decentralization at that point?
Well, I guess like from our perspective, I remember that in the early Discords, like, you know, a lot of the nice thing about open source is that it attracts like Chris Dixon came out with a really good post, which is like very true loyal fans, like 1,000 fans. And I think that that's somewhat true of these systems, which is open source attracts people that, you know, I think the smartest people want to work on challenging problems. And in open source, it's very true, but the problem is like sustaining that becomes problematic because at the end of the day, these people need to get compensated. And there's broken incentives in traditional open source systems. But when you have a Synthetix bag or an Aave Ethland bag or a Barnbridge bag, then you know, it's human nature to be like more vested. And so I think like you're combining the best of both worlds, which is people, no matter what, I don't care who in here, I don't believe this notion that people are intrinsically motivated. You need to compensate them. Like it's just human nature. And you combine that with like a really interesting industry that has very challenging problems, like a Synthetix, like generalized platform, very hard problem to solve, right? And so you attract really smart people that are very passionate. And then over time, the price is very reflexive and it does matter. Anyone that tells you it doesn't is just kidding themselves. It's all very, very reflexive. So anyways, what I'm trying to say is I think it can work both ways. You have really high projects at the moment that go out to market and have these ridiculous valuations that are, I guess, memes when you look at them on a fully diluted basis, but it helps to attract people. Conversely, you can have really small cap projects that are attacking interesting problems. And I think both can attract talent because this industry is trying to solve really hard problems and you're going to attract smart people.
Also, just so I can do the PC thing, I'm not calling out Curve or anybody that came out like that. Like Barnbridge started really high and dropped. So I'm not saying, I'm more thinking the next like curve that opens at, I'm a moon boy and think this industry is going to grow drastically. And so I'm more worried about a $50 billion project opening up. How does that decentralize? How can you possibly decentralize at those levels? And that's more why I'm asking these questions. I'm not calling out Curve. I just want to say that like the Curve community, please don't get mad at me. I just use them as an example of a project that started high and dropped, and we did it too. So like, don't call them.
One of the things I think like the valuations, all this like kind of like financial data, I mean, even if it exists, it's actually a bit less relevant in the beginning, I think, because in the beginning, I think most of the stuff goes into the actual like building and you know, like building the economics, building the software and getting contributions from the team. So I mean, imagine this, like if a team of 5 people or even like 3 persons can do something great, maybe a community of 50 could do, or 100. It's just like, or even 1,000. in terms of activeness. It just depends on like how they're structured. And of course, like I don't think like the question also is about like how decentralized is something when it's decentralized. You know, is it enough that there is like 50 persons or 20 contributing, or do you need the 2,000 people contributing your project? Maybe not. I mean, end of the day, like it's about everyone being able to participate. They have the optionality, and then because of this system, you're able to attract people from various places and build interesting things. So in my opinion, like coming from where I'm coming, the financial data in the beginning, even though it has 24 market and so forth, is very like a not very good information to kind of like a build things upon. And I think it's just like pretty much about the innovation, at least for the beginning, and then attracting market share and then attracting users and so forth, and brand value. But I think like the economics in the beginning is less relevant data. I will not even, for some projects open high, I would give a less shit about that. You know, I only look at the software, and looking at Curve, for example, they build very beautiful stuff, and it's just like that's what gives them. I mean, that's what gives them actually like value, that they're building things in the long run. And I think once you guys are deploying software, you will see that people are using and actually like giving you suggestions how to improve the actual product, and it will be quite fun.
So yeah, and just to clarify, this had nothing to do with valuations. I just want to be like super clear. I really don't even care about market valuations. I'm 1,000% talking about decentralization. I guess my concern it's not a concern. I just think it's something we have to think through for incentives for the industry, is if Curve launched 5 years from now, they may have started at this level and stayed there. So how do you incentivize tons and tons and tons of people? I think Ethereum's a
I don't
very
know.
good model.
I think we're in a weird moment, right, in the space where Curve didn't launch at that valuation, right? Curve launched at no valuation. Like Curve launched at like no one knew what the fuck Curve was, right? Like on the day when Curve launched, there were like 20 people that were like, what is this thing? And like reading about it, trying to work out what it was. Like it was not like it, you know, launched and was worth, you know, $100 billion, right? Like it only got to that level because there was no way to value it until there was, right? Until a token was launched. And I think that that's something that's going to happen less and less frequently. I think we're going to see it's going to be a rare thing for a project like Uniswap to exist for 2 years and then all of a sudden like a token just pops out of nowhere, right? So I think we will see the majority of things launch with like lower caps, build up credibility, et cetera. And so I think the more pertinent question is like, how do you do it from there? But even with Curve, right? I'll say this, Curve launched with a super high market cap, right? I had a bunch of tokens, like a lot of Synthetix people, because we forced people to provide liquidity into Curve as part of our
thank you Synthetix community for that. Yes, there's where the return came.
Yeah. So you know, like it's same thing with Uniswap, same thing with like so many other things, right? Balancer, et cetera, right? Like we just continually force people, as Nocturnal Sheet says, to stay rich in spite of their own attempts to kind of undermine that. But so we, you know, we had this token which had a super high fully diluted market cap, right? And all of the rational people there were like, this thing is going to get crushed, right? And to an extent it did, but then it found a floor, right? If you were still selling at 60 cents, then, you know, you look like a fucking idiot now, right? And I'll put my hand up and say, like, I definitely sold some tokens at like 65 cents in like September of last year, because I was like, oh, you know, liquidity, like I've still got a ton locked up, like it's a rational thing to hedge a little bit. And I didn't go full degen, which I usually do, and just like hold everything and not sell it. But if someone was giving Curve tokens as an incentive late last year, like that person needed to be bought in. If you were locked in for 6 months and you were seeing this trend line, right, you needed to have belief that it was going to turn around, and it has. And you know, we've now seen. So
you selling, this is why I'm using Curve as an example, because they're not on the call and we don't have to deal with like talking about price in their scenario. You selling is a part of what decentralized that project. So if a project just launches
Well,
with hype
yeah,
already,
so
how did they decentralize?
well, I think Tyler,
What
I
it
think
in
what
a
you're
good
saying is
way
like,
was that it helped it. It helped
well,
the
so Kain just posted a really good article, which I think defines what true decentralization means. Because okay, yeah, you can have a high Gini coefficient, which is there could be like think of like a like DPoS, like you have nodes like that have a lot of vested tokens. Like I guess we have a lot of SNX and Aave as an example, hypothetical, none of this investment advice or legal advice or whatever. But like say that we do, like is that if you have like 5 or 6 funds that have like Uniswap as well, like you have some concentration in the tokens, does that make it decentralized or not? Yeah, okay, there is like an ability to influence a protocol, but I guess what Kain is, how he defines it in the article, and Kain, you should just jump in, but it's like this idea that like communities transcend perhaps just what the token, like the concentration of the token, meaning you can go out and fork Synthetix if Kain or us or whoever started to do really bad stuff in a protocol, like what's to stop a community from just forking that and moving? Like then the token is worthless, right? So it's sort of like, yeah, to me, it's this idea that you're always on your toes in these systems because the community can just abandon you and if you start doing the wrong things, and it's very easy, right? There's, so
Yeah, I mean, I tend to agree, right? Like, I think that there, like, decentralization is this like multi-dimensional thing, right? And like, you could have a like, something could be 100% owned by a single entity, and it could still be decentralized, right? Like, in the sense of like the output of that thing could be completely controlled by a single thing, and yet it could still be decentralized. I think like that's actually, it would be hard to construct such an entity, but I don't know if ownership is like the overriding thing for me, right? Like it's is it censorship resistant? Like, does that ownership confer the ability to like modify the thing? And if it doesn't, if it's just like this cash flow, and that's why these projects like splitting up token functionality that I've been seeing lately coming out, like where people are like, we're going to take an existing token, we're going to slice it up into its like component parts, like the governance component, the cash flow component, the liquidity component, whatever it is, the collateral component. I find so interesting, right? Because I can imagine a scenario where like one person receives all the cash flow from a thing. Like, it would be hard to motivate people to care about it, but it doesn't by definition mean that it's centralized, right? Like that it's not censorship resistant and unstoppable and on other dimensions.
I have a question about those types of tokens. How do those work on a DAO, right? Like you're like with Synthetix, like how would you even break out the functions? Because like I think most people are staking like Synthetix because they're interested in 2 of those 3 functions. So like how do you think the DAOs are going to have to like backwards architect themselves? Because I understand how that will work at scale. The cash flow, people pay the voters like a proxy, and you kind of like it's traditional, right? Like, but how do you the all of our DAOs aren't constructed that way.
Yeah, I have no idea. I don't have a fucking clue. I'd have to think about it more, but I'm not allowed to because I have to be in Discord more this week so that people don't get mad at me.
Guys, with all that you're talking about related back to governance, one question I've struggled with is, do you think it's possible for a team, let's just say a DeFi project, to be successful without a token? Everything we've talked about here, it makes sense to me because it's obvious that you put this skin in the game behind this larger community. And if you think back just like 3 years ago, the norm was to say, this is stupid. This isn't going to work. I mean, even like in the like crazy, 2017 euphoria, there was still many people that were just like, I'm willing to speculate and bet on tokens, but I just do not believe that these incentives will actually work out. Now, like obviously everyone here, fully buys into that. We've all participated or have created those communities, but like one that comes to mind is like Future Swap. They don't have a transferable governance token, and I don't want to speculate on whether they can be successful or not. But maybe that's one example of a team I really respect what they're doing. But I've thought about, is this possible unless you can put that token somehow to work?
Yes, I mean, you could create a protocol and don't have any governance. Like, and I think we will see even governance minimalism a bit during this year, because that some of the stuff you just we're adding governance where maybe it burdens a lot of things, and some of the things we're adding governance where it might actually not need it, but some things actually requires governance and creates better systems. And I mean, nothing stops people for deploying immutable code, like whatever functionality they are doing. So that is totally possible. But governance, if it's like applied right, it definitely unlocks functionality. Plus, it's a way to get communities together and have something that they have together, kind of like a. That's was kind of what was behind of this fork from Uniswap to SushiSwap. And eventually Uniswap having to do a token as well. So I believe you can.
I'm curious Seb's response, not to put you on the spot, right? But like, you don't have a token, so like, what can you do it?
Well, yeah, I think definitely it is possible to have a DeFi project without a token. Like, it really becomes to defining what your product is, and it comes back to like defining what your product is and what would a DAO component or a token component do within that product. Like, if you look at Zapper, for example, like our goal is, to make DeFi accessible and easy to use. So hypothetically, if we would to have a token in the future, it has to like be an accelerator towards that goal. And if you can look at DeFi in general, like, look at the stack that we have right now. You have lower in the layer where you kind of need these incentives to grow liquidity in a protocol. But if you go to more like consumer facing, it isn't like immediately clear exactly how, a token could kind of accelerate, a inherent part of that product to grow. But yeah, I mean, I definitely do think it's possible to have a successful DeFi project without a token. And I think there are going to be a lot of projects in the future that don't have a token whatsoever. Like, I think the token question is a critical part of a project to kind of determine which path it's going to take in the future. But I think too is figuring out exactly what product you're building, what's your mission, your focus, and thinking of how a token and a DAO would play into that, and not thinking of like retrofitting or like fitting a token in your model. I think it has to be like a very important part of your product.
Yeah. And Seb, I wanted to ask you a follow-up.
Wait, I have to let my wife in the hotel room, and I want to say something real quick. DeFi, Zapper, if y'all are looking for a token incentivization model, my community, like me personally, I watch them tweet at y'all to do more things than any other protocol. Zapper, add this. Zapper, add that. That's your token incentivization model. Build a token to make people like vote on that. Because literally more people, when I get online every morning and read through all the Barnbridge tweets, it's like, Zapper, do this, Zapper. That's your token model. Like, retrofit that.
Yeah, no, that's a good point, Tyler. Seb, I wanted to ask you a follow-up, which Kain, you alluded to with this sushi uni dynamic. From a competitive standpoint, do you think that Zapper can continue to be the leader if you have a competitor come out with a token. In a world where it's ruthlessly competitive, this is just how do you think about that if one of your competitors were to issue a token? Like, does that put pressure on you? Do you think it doesn't matter, ultimately the best product wins? Like,
at the end of the day, I do think like the best product will win. Now, when you do launch a token, it does help in bootstrapping a community, and then that community can help you build that product to be even better. So to me, the question or the answer comes back to like, does it make your product better or not? And if it does, then yes, like it has to be part of the future. I think so. One thing that there's literally no amount of validation the market can give me for being like one of the people that was just diehard, like everything needs a token in 2018. Like that is an endless black hole that you could just dump market validation into forever. It will never be satisfied. Like, so I'm probably overcorrecting on this, but I do think that like tokens to an extent are like table stakes at this point, right? Like you literally, like, I think Santiago's is right. Like if there are two things and one has a token, and also like, let's just fucking not pretend for a second here that like governance is the only, value prop of the token, right? Like it's the cash flows of the thing, right? And, Tyler's point is when people are like begging you to do things, right? When people are like screaming and shouting and begging you to do things, and there's more people who want you to do things than you guys can do, you've got product market fit, right? And so then the next question is, okay, having reached product market fit, how do you monetize that, right? Are people still going to continue to beg you to do these things if you are capturing some value from the things that you're doing? Obviously, right? Like I will absolutely pay for Zapper. I use it every day. In fact, if you took it away, like it's, I can't remember who it was, probably like someone from Andreessen or something, like saying like, if you take this thing away from people, are they going to like riot, right? And the answer is yes. Like I absolutely would. I would try and find someone and fund them to go and like rebuild it if that's what it took, right? But until you guys have cash flows, then yeah,
the protocols will pay for it too. Like the protocols needed as
100%. I would absolutely pay you an SNX to like do a bunch. I mean, I think I sent you a list. I think one of my guys sent you a list of like 10 things, right? And like, like tell me how much money you want. I'll literally give it to you right now, right? Like, and I say that like in all seriousness, right? Like wherever the list is, like monetize it by like having a list of like, even features, right? I'll pay to be at the top of the feature list and get done this week, like no problem whatsoever. So, all of that said, like you have product market fit, but you haven't yet monetized, right? Which is fine. You can, I think, early stage equity is not monetized, right? Like, 2012 Uber equity was not a monetized asset, right? Like it was a thing that lost money. Like its value did not come from its cash flows, right? It came from like the speculative future cash flows that people believed that it would generate, right? And I think that that's totally fine. I think we will get to a level of sophistication in this market where someone can issue a token. But again, to take a step back, like governance is an incremental additional thing that these tokens do. The cash flows are the critical component, and we couldn't say that in 2017 and 2018, right? Like we had to like dance around it because everything was an ICO. Now you launched DAO first. It's not a security, it's just a DAO. It's a protocol that a bunch of people are coming together and building, and that protocol is owned by everyone collectively. And if it generates cash flows, the people who continue to own it will collect those cash flows. And that's a model that like regulators are not yet ready to contemplate, right? Like the existing, existing regulations don't contemplate that model. And I think that's where we're at. And I think that's very different to, hey, I'm going to go out and raise, $4 billion in a token sale to go and do this thing. Like the market has matured in a good way.
But yeah, I think it's going to be really hard for a project that doesn't have even that potential to monetize those cash flows and give them to the community to compete with one that does.
But the real question is Sav and DeFi Dad, when Zap token? Like, what the people want to know.
Well, I was going to say, like, you know, when you actually think about, so at the end of the day, a lot of these DeFi protocols are networks, and bootstrapping networks is extremely hard, like extremely hard. You look at Uber or some of these traditional marketplaces, A, they're not profitable. B, they only got off the ground because you're in like the last 10 years of quantitative easing where you have like record low interest rates. And so capital is so cheap. In any other environment, you wouldn't have had Uber get off the ground because Uber's not profitable other than in 2 cities. So the Ponzi continues in the traditional markets, which is going to end at some point because there's going to be massive deleveraging. But like you can contrast that to a system like Synthetix or Zapper or Barnbridge or Aave. Like Aave went from 0 TVL last year, this time, to 5 billion plus. Like, tell me another fintech company in the traditional world that has been able to do that. And in large part, to Kane's point, is because you have this community that feels it's a community-owned network. And you're solving for both sides of supply and demand because people have a vested interest because they own the network. Visa couldn't have done that in the 80s. Like, it was so hard for Visa to like get merchants and consumers. And this credit card was like a scam. Like, people were like, what the fuck is this credit card? Like, what am I going to do with this? Like, you know, people forget, but like this was not too long ago where like getting Visa off the ground took a Herculean effort. And lo and behold, you have these fintech networks like, you know, in DeFi land that literally get off the ground like that and are so capital efficient. And in large part, I think purely because it's community owned. And you just cannot compete against that like sheer energy and momentum. It's impossible.
And it's like the efficiencies are fucking astronomical, like comparatively, right? Like, you know, it's the infrastructure is, I mean, the infrastructure is not where we would want it to be, right? In terms of like ETH-L1, right? But like, you want to see what happens when you have something like, you know, Aave built on L2, like, and not like, you know, I say something with that level of efficiency on an efficient network. You combine those two things, it's gonna fucking blow people's minds. Like, it's just gonna scale in a way that like nothing in history ever has. And so, you know, we've been constrained very much in you know, L1 block space. Once that constraint is removed, it's fucking gonna be nuts. It's gonna be crazy. Like the next 6 to 12 months, we're gonna see some real, like, to Tyler's point about $50 billion protocol launching in like 30 seconds, like that, something like that's gonna happen.
Wait, actually, that we see, like, you know, something like you have $100 worth of stable coins and you can deposit them and start earning, which is fraction of a cent. And even like it's so small that, you know, protocol governance treasuries could start paying those. So then we see actually people depositing from all over the world, you know, smaller amounts. And that's very empowering, you know, because I mean, eventually now it's kind of like a you need very big amounts to cover your gas, you know, when you earn and deposit. So those gas costs going down is going to be very, very awesome.
Guys, what about layer 2 and tokens? You know, we've all been following the fact that Synthetix, Kain, you guys are in. I can say we are. I'm a part of Synthetix as well. We're moving to phase 1 next, right? Phase
You're
0.
probably more in charge than me at this
point.
Yeah.
Well, yeah. I'm excited. Like right now, there's a one-way bridge. I can put my SNX onto L2, and then I can participate in liquidity mining. But everyone's excited to be able to move back and forth, so that like when I've got SUSD minted, you know, I can like, let's say, go trade it for something on Quenta or some other like AMM. So yeah, anyways, there's Optimism, which is just, you know, has such big name projects working with it. As far as I know, I don't know of any sort of plan with a token with Optimism. But then on the other side of that, you know, we all know Polygon, or what was Matic, is doing very well. I'm working with lots of projects, big name projects, and they do have a token. So I don't know. I'm wondering, like, do you guys have any thoughts on what we discussed previously? Like, does this also relate back to L2s? Like, is it necessary for a layer 2 to have a token, or is it not?
I think like a something we're kind of realizing right now is how awesome the EVM is, because that's been kind of like the thing about the layer twos right now, or chains that are getting adoption, like Binance Smart Chain, which isn't a layer two, but they've been getting like incredible adoption partly because they're, you know, EVM. And Polygon too is actually right now at Zapper we're working towards supporting layer twos and sign chains, and the fact that they're EVM makes it so easy for a developer to integrate, and also in a different way, like you inherit some of the coolest things from composability in DeFi just by nature of, you know, you could have multiple apps deployed on Polygon and they kind of interface with each other in an interesting way. And so, yeah, for us, you know, Zapper, you'd go directly on the website and it would be fully agnostic of whether chain you're on. You could be on Optimism, Polygon, Ethereum. And from a tech perspective, like they're all smart contracts, you know. Like when we integrated Synthetix L2, it was like incredibly easy because it's like the same smart contracts, but just with a different address and just calling a different, you know, provider. And for developers, I think that's going to be something super helpful in adoption, mostly talking about like optimistic rollups because they are EVM compatible by nature. But yeah.
I guess I'll buy. I think it's a weird situation, right? Because you know, let's imagine a scenario for Ethereum where there's no native ETH token, right? Like where, like, you know, I don't know, it used like fucking some kind of weird wrapped Bitcoin thing to pay for things, right, on the network. You know, does that work? No, like obviously not, right? Like, I mean, you know, it almost sounds like colored coins or something like that, but like, it's just not going to work, right? Like, you know, to Santiago's point, like there's a very powerful incentive alignment in knowing that you own a part of this network. And if it works, then you're going to do well. Like people are incentivized by money. I don't know how else to express that. Like we can sit here and pretend like that's not the case, but like people are incentivized by money. Money gives you the ability to do things, and people like to do things. And if you put something in front of them that is going to incentivize them, it needs to, you know, have that kind of dynamic. And so, you know, an L2 that uses native ETH that doesn't have its own kind of incremental competitive aspect versus, you know, L1 or some competing chain, I think it could still work, but I just think you lose out on a lot of the you know, the really powerful network effect dynamics that you have in these other protocols on you know, L1, things like Aave, you know, things like Barnbridge, et cetera. So, you know, and Curve, Uniswap, like all of the things that we've seen that, you know, network effects are really powerful, and then you put a token on top of it and it just, you know, juices it up 10x or 100x or whatever. So to not have that, I think is going to be challenging. But, you know, we'll see, I suppose, right? Because it is a weird situation where, like, if you're sitting on top of L1, you can use native ETH as your, you know, medium of exchange on that network and kind of get away with it with pretty low friction.
I don't think
but yeah.
What I don't understand how it could, like, so all the DeFi protocols, like one of the reasons, like what I think, like Andre kind of morphed what Kain was doing with yield farming to like invent like this concept of proof of capital and like a fair raise. And so people like will look at us as an industry and be like, well, you're just giving away all your tokens. And it's like, no, liquidity is the lifeblood of DeFi. So the proof of capital as a mining mechanism is as important as solving cryptographic puzzles is for like a layer, like a base layer protocol. Because the number one thing I'm worried about with DeFi is liquidity. The number one thing the reason that I'm only worried about liquidity because the base layer is already taken care of the security platform. So I'm not sure that like governance for something like a Optimism or a Matic or a Polygon or that one that Joe Lubin's really excited about. I forget the like Scale or whatever. Like they're gonna have to come up with they're gonna have to come up with as an industry that layer 2 technology is gonna have to come up with the tokenomic model that's gonna work. And that's kind of their job to figure out what that is, right? Kain and Andre kind of invented that for our industry, and I'm sure that Santiago and Stani were massive stakeholders in helping invent that. But I admittedly, as Barnbridge, just saw I got what they were doing and copied it. But they're like that layer 2 is going to have to come up with their own model that works, and it's not proof of capital because there's a security metric there that is very different than DeFi's. And maybe what they build, DeFi will adopt some because DeFi has its own security problems that we're going to have to deal with long term as an industry. But they're very, very, very different. And I think that they're going to have to sit down and think, why are people using this? And then incentivize based on that why, because that's what DeFi did. But it took us a long time. And like I was in the Synthetix Discord talking about this shit too. So like it was crowdsourced ideas. So once it works, then they're gonna have to figure out how to make it work later from a tokenomic perspective. I don't think it's gonna work without a native token, or there's not gonna be any base.
But it's a weird situation though, right? Because like, okay, as much as I'm talking about cash flow and network cash flow, ETH doesn't have cash flow. It's actually like holding ETH does not give you a right to the cash flow of yet, right? Like,
well, unless you're staking out of the beacon chain with Lido or something.
It will.
100%, right? 100%. And so like that's where like it's even weirder, right? Because like you go back a year ago, I could say that like unequivocally.
That's been the promise for 2 years. So a lot of this has been built.
But here's the thing, right? Like it doesn't have cash flow, right? And yet it has this price appreciation, these network effects because of block space demand, right? Like it tends to work because the network is just getting bigger, right? If on something like Optimism you're using wrapped ETH, then like you're actually helping the value of ETH, but there's no cash flow, right, that flows through, right? Like there's no, and so you will still need on an L2 some way to capture, you can have as much demand as you want, right? You can have as much product market fit as you want. You will need to find a way to capture that cash flow because you don't have that property that ETH has. Maybe it like evolves into something like,
Yeah, no, I agree with Kain. It's the same as like any system, right? Any political system, there needs to be a tax to use certain resources. And the Ethereum right now is a massive organism. And then you're spacing it up and freeing up capacity where really only really high value things like oracles should be on L1. Everything else can be on L2. And it's just it's like containers, if you will, or microservices in traditional software. Like you have them now, like you have Optimism and Starkware and Arbitrum and some other these like suburbs, if you will, that connect to the main city. But you still need some sort of token that determines the allocation of resources within that microcosm. Now, the cash flow really comes on top of that, right? There's a whole economy that is built on top of that. And that reflexively gives value to the pure governance of how you compete for resources in that system, because there's so much value at stake built on top of the city, right? Manhattan in and of itself, that land is actually worthless. It's a swamp. It was a swamp when it was colonized. But the fact that there's a Rockefeller Center and the World Trade Center and Wall Street there in that piece of land that is no different than a piece of land in Kansas. You could argue Kansas is better because it's more geographic, like it, you know what I mean? It's not swampland. But the fact that everything is built on top of that gives value to being able to reside in that city. And so that's just a parallel. It's different. These L1 tokens or these L2 tokens, which I think you need to have an L2 token. There is where governance, and it becomes super important to determine the allocation of block space. And that's sort of a big distinction between pure DeFi protocols.
It may be governance actually, but I think that it's not going to be governance in the same way as DeFi, because DeFi is processing so much volume of money. And I'm not sure that the volume of money going through these L2s is as important as the cost of doing it. So I think that at the end of the day, in my opinion, Kain's probably worked on this more than anyone in the industry other than the people that work at Optimism. But I think that Optimism needs to figure out why are all of us as protocols wanting them to work so bad. And that's what they have to model their tokenomics off of, because we will all pay to use it in the same way that we would pay to use that. Like, and so
I almost disagree, right? Like I almost, like there's like a very slight nuance here where we don't have a fucking choice, dude. Like we will use this. They could beat us over the fucking heads as we're using it, and we will still all say thank you very much. This is amazing, because there's fucking no block space left on L1. Like this gives us an opportunity to scale things out. They don't need to do shit. We will beg them and plead with, and I'm watching it happen in real time. People are like, please let me in here. Like, what do we need to do, right? And, you know, it's coming. They've said, like, it's going to come this month. Like, this month, they will open the doors and they'll let people in. And you will fucking get on your hands and knees and you'll beg them to please use this system. Like, they don't, like, it's just the way it's going to happen.
Do you think they should charge, like, a fee on block space? Because it really is that. It's like that Andre, like, the Andre, like, comedian guy that's at the White House. He's like, let me in. Like, that's
100%. Yeah. So look, I mean, here's the thing, right? You're going to have a situation where basically you are making the usage of L1 block space so much more efficient, right? Because you're taking a whole bunch of things that would otherwise require individual transactions and you're rolling them up, for want of a better term, right, into a single transaction. And when you do that, you can basically compress a whole bunch of information that would otherwise have required, you know, someone send everything out to all the nodes. And so you could very easily, right, in the case of Synthetix, let's say, like I did a calculation at one point, like in the first couple of weeks, like it would have been $10 million worth of ETH gas that would have been paid, right, to do all those transactions. And I think it costs like a few $100K, right? So if you had a margin on top of that, without even creating a token, you could charge that margin in ETH, right? That network could charge a 10% margin on top of every one of those transactions. And the Synthetix community would say, thank you for existing. Like, what else can we do for you? Like, it just, like, it's such an obvious product market fit. It's such an obvious way. Like, you don't need a token necessarily to capture that cash flow. The issue that you have is if you do that, there's a very clear regulatory problem that you have, right? You're adding a margin on top of running this decentralized network. Like, that probably doesn't work. And so there will need to be some, you know, obfuscation is probably not the right term, but like there will need to be some way that you can allow that to not be a centralized value capture, right? Where you allow other people to participate, other people to, you know, allow people to do this thing. And it, like Synthetix, right? Like Synthetix doesn't just have a bunch of money that it posts as collateral and let people trade against it, right? That would be a centralized, you know, very obvious counterparty driven thing. It says, hey, everyone, you can buy this collateral and you can turn up and you can post collateral and then everyone else can trade against it and you can share in the value that that creates, right? Optimism needs to get to something like that in order for, you know, for it to be able to capture value directly. But there is no question in my mind, it can capture fucking like massive amounts of value.
if it's that
Massive amount.
cheaper, wouldn't the move be to basically ensure that it's decentralized and make it a governance token then that also captures the value of ETH or wrapped ETH? But then if you can use your layer 2 to air, so they said that Ethereum was sufficiently decentralized, the regulators did. So couldn't you use Optimism to airdrop it to every single Ethereum user? And then when they use Optimism is when they redeem for the governance token? I mean, I'm not a lawyer, I'm just spitballing. That seems like a no-brainer.
So one thing that I would say is, and you know, you may be somewhat familiar with this, Tyler, building shit in this space is fucking hard, right? Like just the very act of getting something to work is a fucking nightmare, right? Like forget about trying to capture value from it or whatever. Like we're still at like step 1, right? Of like actually build the thing and make it work and make it sustainable. So, you know, like there's a million different ways that I think value capture can, you know, be done, and I think can be done in the right way. But like, it's like right now it's about like step 1, make it work, make the thing work and get people to use it.
I mean, to round out this discussion,
Yeah, go ahead.
I was just going to say, like, for us, like from an investing standpoint, sometimes you need to make a leap of faith in that something that has a lot of demand will accrue value. It's like when no amount of financial engineering can solve for a crappy product or lack of demand, because when you, again, going back to Uber and all these food delivery companies that are garbage, when you give someone $100, they're going to pick it up and they're going to steal it and they're going to walk away. The only reason why people are in these systems, mind you, they need to jump literally through barbed wires because MetaMask and getting money in the system. So like we do have millions, I guess now hundreds of thousands of very avid users. And the fact that there are so many high gas fees, you know, the Kyle Samani of the world think that like systems that like Ethereum sucks because of high gas. I would actually invert and say that's just a very clear indication of people screaming that they love this shit and they want to use it. And as soon as you go to an L2, it's like hell over high. I mean, you're just opening the floodgates to everyone. So anyways, like what I'm trying to say is I take stock in as investors, sometimes you need to make the leap of faith that if something's really good, like Zapper, it's a great product. It has a lot of demand, network demand. If you have that, then you can somehow figure out at some point value accrual because it's just such a good product. And that's the beauty of this industry. You know?
And that's the thing. I mean, if you have demand, you know, then you have ways to think of ways of how and to whom stakeholders you distribute that value. Because I mean, people are willing to pay a premium or pay have a saving if they're using something that's innovative. But I guess like the case is this, you know, we're using on layer 1 for all the transactions the same security, but I don't need the same security in everything I'm doing. For example, I want to, let's say, deposit switch my yields maybe on layer 2, but I want to mint my NFT on layer 1. You know, that's just like preference thing. And it's kind of the same that you have a wallet that you're carrying all the time, right? And you have cash there, not maybe anymore, but let's say you used to have cash there. And then like, let's say you're not always carrying all your wealth with you when you go out, but you have your wallet with cash, your cards with some spending limits. And that's the security you want for the user experience to be kind of like easy and less costly. And then you might store something more valuable in a vault that you have in your home, in a bigger vault that might cost a bit more. So it's just like the issue is that now we're using those big vaults to open them and, you know, have the management and transact, and that's costly, and we don't need to do everything on layer 1 necessarily. And it's just like it's a true fact. I mean, security is a cost. It doesn't come without you know, like with a cost.
100%, totally agree with Stani. We're all living inside of a fucking bank vault right now, right? And yeah, it's very expensive to do that. It's expensive real estate.
The thing that resonates the most with me that we keep coming back to is I would much rather be working on or investing in, supporting, testing, just being adjacent to something that people cannot live without. And that's for me, like before I got involved with Zapper, I was just obsessed with Synthetix. I got obsessed with Aave, like early on. Like it kind of blew my mind because I was like, it's just another lending protocol, right? It's like Compound. But then like started to sort of see like, okay, like I can see I can see what's possible here with flash loans. With Barnbridge, took me a moment, but it was like, okay, so this is huge. This is a use case that more sophisticated investors are likely to really grasp and want to like hop into our space. So at the end of the day, it's a beautiful thing that you can deploy software so quickly that can affect so many people. And then maybe figure out later on, like, does a token need to be involved? Is there a way to, what is the way that we accrue value to incentivize a community behind us? The product market fit, that's the hard thing. That's something that like, you could talk to any startup founder in the world outside of our space, especially, who would say, I would beg to have people knocking on my door asking for, in our case with Zapper, the feedback we get with Zapper, you feel so lucky to have users just coming to you and constantly bombarding us with all of this feedback. It is absolutely a blessing as part of working in this space.
Yeah, Santiago, you really nailed that. Like, I tell people a lot of times with this stuff, like, if we can nail product market fit as builders and we can build cool stuff that people want to use, someone else can figure out how to account for it for us. Like, that's like, people will come downstream and figure that out later. I think that one thing that crypto got wrong in the ICO days was that they tried to introduce a token economic model that had to work day one. And that's one of the things about governance tokens that I adore, is that if you have like a fungible governance, like, or changeable governance, like, you can, the community can figure out how to manage some of that stuff. But what Santiago was talking about earlier about product market fit, that's the most important thing. If the builders can build things that people want to use, the community will figure out the governance and tokenomics. I think that is for DeFi. I still think layer twos are going to have to figure that out, but that's one of my favorite things about DeFi right now is we need to be worried about building things people want to use, and the community it's going to get to the point that we're not even in control of how that works.
Yeah. Well, I mean, Peter feels I respect Peter for what he says, which is you can have like a somewhat crappy founder or crappy elements of a startup, but if you're attacking a really big market, you almost want to favor a big market versus you can have a really good team attacking a terrible market, and that's probably worse off than having an okay team. In this case, I'm saying you could have terrible token economics, but if you're attacking a really interesting use case that people want to pay, like, and people are paying high gas fees right now to interact with these systems, then your margin of error is quite high. I mean, Synthetix, you guys went through a total redesign of token economics, but there were a very diehard community that was like, you know what, let's figure this out, because governance is fungible, token economics are fungible. At the end of the day, that's the core of the community, that you can change things as you go, and you have some malleability in these organisms to say, okay, yeah, the power of the community is you have a built-in margin of error, but you start from, yeah, it would be really, really cool to have a generalized Synthetix platform, because you know what? I live in Mexico and I can't get access to products, and a lot of people here will die to be able to buy a synthetic Tesla. And unfortunately, the financial system is very siloed, and it's in my opinion, discriminates a lot. And at the very core, you're just shattering that bullshit. And there's really no reason why finance shouldn't be untethered like global pools of capital that just go to the most efficient places. And to me, that's what's most the thing that motivates me the most to say, oh, let's just build systems that give power to so many people, right? Where, you know, so anyways, that's sort of how I think of it.
To your point, Tyler, about what ICOs got wrong, like I think what ICOs got wrong predominantly is they fucking tied themselves up into knots, being so petrified about actually generating value that could be captured somewhere, that they, you know, came up with these convoluted schemes of like how value was going to accrue to the token that they were selling, that it just became idiotic, right? Like it just became nonsensical and self-referential and just like ludicrous, right? Like, and most of the models were just utter nonsense, right? I think when you look at the things that survived through 2018, most of those things that survived were things that, you know, a group of people, there were a coordination mechanism to allow a group of people anywhere in the world to come and provide a service to another group of people and charge for that service in a decentralized fashion. That was it, right? That's the shit that's still here. The stuff that was like, oh, you know, I'm basically going to build a company that's going to be a payments company, but the, you know, only way to pay for this thing is to use this like weird token, and hopefully so many people are going to want to pay for it, and it's going to be so much better that the token will just go up in value. Like 95% of the ICOs were just that kind of nonsense model, right? And so, you know, like there's a lot of wastage to kind of get to the point where we are now. But, you know, my view the whole time has been that we would get here. We would get to a point where like people were no longer so petrified to like actually say this thing that we're building is going to capture value. It's going to get product market fit. It's going to generate cash flows, but the cash flows are not going to flow to, you know, 10 people in a room who raise $30 million or $50 million or $200 million in an ICO. The cash flows are going to flow to everyone anywhere in the world who's holding this thing, providing the service. That's the critical difference, I think, right? And I think that's where most of DeFi is now. Like I'm an Aave stakeholder. I didn't participate in the ICO. I hold the token. I, you know, provide a service and I get paid for it, or I will soon, hopefully. I'm waiting to get paid for it.
Yeah, Zapper, please don't make me use Zapper to zap to use your protocol.
Yeah, I think like also in 2017, or I guess like still now, it's kind of like the classic startup mistake where a lot of founders will spend a lot of time thinking about business models instead of actually thinking about the problem they're solving and the product. And like before you kind of get to the business model and the cash flows and whatever, like you have to figure out, you know, what you're building and who you're building it for and why would they use it before like having any kind of weird scheme regarding to a potential token.
Yeah, products first. I mean that's how I would say that product always rules. I mean, if you build something that, you know, people don't use and don't value, then it's very difficult to even, if you look at like traditional businesses, you know, build monetization or kind of like a value distribution. So I think like I would rather focus just building a very good product and then thinking like whether this product needs decentralization, community ownership, and if it does, you know, then definitely like but nothing stops thinking those like early on and thinking a bit further.
Yep.
And especially like if the nodal light is decentralization in your kind of like ethos and like thinking it all the way all the time a bit.
Guys, we probably should wrap up in just a few minutes here. So I just want to remind you of that and see if you have any like final thoughts. But I really appreciate everyone's time. We, per usual, went 35 minutes over what we planned originally. And then reminder to everyone, if this is the first time you've watched Ape Tapes, this is episode 3. If you look up Ape Tapes on YouTube, there's you can check out the other episodes there, and then follow ape_tapes on Twitter for lots of funny videos and gifs. So, but anyways, guys, yeah. Any other final thoughts? Maybe also, what are you excited for? That's it could be something related to like your own work to share, but also could be like maybe a DeFi project that you discovered recently, just that provides a lot of value.
I'm just gonna say I'm really excited what's about to launch on Zapper next week. So yeah, be on the lookout.
Are you're gonna finally fucking do that stuff that I asked you to do a month ago? Is that what's happening?
Exactly. Where am I in that list? Like, did I do a few of those, or like there's still a few missing?
I think there's still a few missing. I think you did one of them, so I appreciate it. Thanks for that. I'll take one out of 7 or something like that.
Great. It sounds like a dad, like being like, "Did you do those things I told you to do, Seb?" He's like, "I did one of them," and he's got his beanie hat on too. So
I took out the trash. Stop fucking bothering me. I'll clean my room later.
I did have actually. I didn't have a final thought. More just a question. Santiago, where'd you get those sweet curved screens behind you? Are you building like what are those like 3D movie theaters? What are they? They normally have them at museums where you sit there and it's like a big globe in front of you.
Yeah, I don't know. I bought one and then I was like, well, fuck it. I should probably just have 2, right? And it's actually pretty bizarre because it spans like it's interesting.
It's proof of
I'm not doing it.
When you do a team to invest, you go, you're probably wondering how we're doing at ParaFi.
You know what?
I have 2 screens. I only needed 1. I bought 2. You're doing pretty well. So do you want to work with
Well,
us?
you have the layer 1 and layer 2 farming. So
I need to have like multiple.
When we come back, it's going to be like 360. It'll be like 360 immersive, and he'll just like swivel his chair around and like look at all the different monitors.
Yeah, it's like an air traffic control. I need to keep track of all the Discord channels for all the different projects, so it's impossible to have everything open in one screen. But yeah.
For me, I think just like everything we've talked about is super interesting, and it's the convergence of all these things, right? Like, as one thing that we've noticed at Synthetix is like we've kind of dealt with a lot of the low-hanging fruit, the easy stuff. We've now gone to the really hard stuff and things that are going to take like a lot of thought to do it in a way that is not a huge risk for the protocol. And so that's something that I think, just across all of DeFi right now, there's a whole bunch of experiments going on. And that experimentation, to Tyler's point, right? Like you get to watch it. You get to watch what Stani's doing. Hopefully we'll get to watch what, Zapper does when they start to decentralize. Like Santiago obviously has a front of the house seat for a whole bunch of experiments going on, and just starting to kind of pick and choose and play around with some of these different ideas and try and work out how to combine them. So I still think it's super early and we don't have a playbook yet, but there's some cool stuff that's starting to emerge. So everything we've talked about is like pushing in that direction in my mind, and it's super interesting and important.
Yeah, I mean, we haven't covered this in this call, but I just want to say, for me, it's a long time in the making, but finally having visibility into EIP 1559 is incredibly exciting, because I think that really solidifies Ethereum. I mean, I've been thinking more about this a lot, but we keep anchoring this industry to gold, and to me, that's kind of it's kind of lowballing, because the internet is much larger than gold. And Bitcoin is the first proof case of social consensus and trust in something that is not in the hands of a government, and more so in the hands of a community. And yeah, I mean, I think a lot of people are going to be perhaps caught off guard in how big something like Ethereum can scale and power, not just, and combine that with L2, and yeah, I think you're off to the races. And none of this is legal or financial advice, because my compliance team kills me, but I'm very excited about those two converging this year in a very meaningful way.
We'll add some.
Can we edit that out? I still need to buy some more ETH this week. So can you guys, would you mind just chopping that section out, please?
Yeah, we definitely can.
I'll add a whole bunch of like moons to the like art we make for this one. Like we'll have apes and then we'll have moons. So
just
longer
Santiago and just like
moon
moons,
apes.
like just bubbling up as he's talking about Ethereum. Amazing.
Stani, have you said yours yet? Because mine's really quick and boring. I mean, mine's obviously we're launching Barnbridge soon, smart yield. So like that's obviously what I'm most excited about. And I don't have anything else to say. So I feel like I'm more interested to know what Aave is doing.
We're actually focusing now quite a lot on improving like governance experience. So we're of course building some protocol related things, but what we're now working is this kind of way to make it easier to participate in governance and have it as kind of like more interactive, so that as a contributor, if you have proposition power and you have this kind of like directory of people you could delegate to, could set new parameters from the GUI and kind of make it a bit easier for parameters, but also kind of gamify a bit things. So this is something we're working upon, and I think just bringing more visibility on that side. And then next step is also that we are trying to get more awareness for community developers to kind of like more instructions on how to contribute into the protocol and that kind of stuff. And grants program is something that someone is working upon at the same time. So that's pretty much like, it's very governance focused at the moment, but I think we're in that kind of state that we just want to get more contributors at the moment. So, and yeah, looking forward, Tyler, to the launch as well.
Cool. And I'll just leave it with I more recently have noticed that I think a lot of our like Twitter feeds are filling up with maybe a little too much confidence and arrogance. Like we're clearly in a bull market. People are excited, but I've noticed also that there's just that many more products that are being released. And I just want to remind people, if you're watching this and whether you're like whether you're a DeFi degen or whether you're new, just keep trying new products. It's really important that you keep a level head and you stay incredibly hungry to continue to find those new ideas, those new money Legos to play with. I become incredibly dissatisfied and tense if I don't find something literally almost daily. But I think it's really important at this point, whatever part of the market cycle we're in, you just got to keep learning, you keep building, you keep trying new things. And I think like we as an industry, like, I mean, we'll look back years from now and say, geez, like, we really all underestimated where we were going. We thought we were bullish on what we're building, but you just have no sense of how, what sort of exponential growth we're going to see in the coming years. So, and just, yeah, thanks guys for your time. This was awesome. I just learned so much getting to listen to all of you, and I hope listeners can say the same. So, but anyways, guys, we'll do this next month. And yeah, again, everyone subscribe, look up Ape Tapes on YouTube, and follow apes _ tapes on Twitter. So thanks, guys.
Yep. Thanks, guys.
Thank you. Thanks for moderating.
Thank you, guys.
Appreciate it. See you guys. Talk soon.
Bye.